This is all about Bitcoin, a show dedicated to all things, questions, and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network, a collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XBX index is at $44,457. Bitcoin is down about 4% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So looking at our top stories, Bitcoin is flashing signs of buyer exhaustion as bull pressure begins to wane, according to on-chain data and CoinDesk sources. Bitcoin is up 40% over a 3-week period on the back of strong institutional and retail demand. Still, the crypto is showing signs of buyer exhaustion as seen by the relative strength index, which is signaling overbought conditions circled in green down there. And U.S. Representative Anna Eshoo is asking her fellow California colleague, House Speaker Nancy Pelosi, to amend the crypto tax provision in the Senate's infrastructure bill in an open letter on Thursday. Eshoo described in Politico in 2014 as Pelosi's closest friend in Congress, wrote that the current definition of the term broker for crypto tax reporting purposes is too broad and may be difficult for some entities to comply with, adding to a growing group of bipartisan lawmakers pushing back against the crypto provision. And finally, China's central government issued a 5-year plan Wednesday that calls for tougher regulation across industries, signaling that the recent crackdown on tech industries that has shaken investors' confidence will not abate anytime soon. Key to the crypto industry, the plan calls for more legislation on tech industries and the environment, intensifying law enforcement in finance and ecological management. And joining us now to discuss is Kim Grauer, Director of Research at crypto data firm Chainalysis. Welcome, Kim. Great to have you on the show. So taking a look at Bitcoin, Bitcoin has climbed 35% over the past 30 days. It is 30% away from its April peak. Yet we saw a huge run up in the crypto market since Sunday, but Bitcoin is pulling back. Is it overbought?
Is Bitcoin overbought? Well, I think that the thing that we've been really paying attention to at Chainalysis is all of the talk of regulation coming out of Congress. And I think that the price run over the past few days has really reflected the industry's overall excitement that Congress is really taking on regulation. And that's really being reflected in the prices of cryptocurrency today.
That's a really interesting take because, when China decided to look at cryptocurrencies, they cracked down on mining and we saw a precipitous drop in the markets. Now with the U.S. sounding off on regulatory concerns and with SEC Chair Gary Gensler and this infrastructure bill that has concerning implications for crypto miners if interpreted very broadly, the markets are actually going up. So it looks like, bad news in the U.S. versus bad news in China, it affects the markets very differently.
Yeah, I know it's every region is impacted by different factors. And I think that the one kind of common thread is that people want to get regulation right. And so we look at what's happening in the United States and, there's all these debates about this specific bill. And how do we do it right? And the fact that so many people came out and said, this is not how you do it, or had an opinion about how the best way to carry out this legislation, I think really signaled that the industry is ready for regulation. They're ready for things to grow. And in order for cryptocurrency activity to grow, you need regulation. And I think that was a really positive signal.
Okay, that's a great take on what we're seeing. In terms of price action in the short term, are there any metrics you're watching out to that might be able to explain what is happening in Bitcoin right now?
Well, we track. We're like you said up front. We're a data platform, and we've got our eyes on all of these different metrics, which we look to in order to kind of give us some indication of what might be happening with the price or what is what can we expect in terms of activity? Some really great metrics that we actually track are on-chain flows to exchanges. And if you have a sense of flow of cryptocurrency entering in an exchange or leaving an exchange, that is correlated with different types of behaviors. And so being able to have that extra kind of your eyes, I guess a comparison that I would like to say is you can see all of these trades happening on the S&P, but you can't see people sending their funds to the S&P in order to carry out these trades. So with cryptocurrency, we have this extra data set. We see people moving their funds to exchanges. Maybe they're gearing up to make a buy. And so we really pay attention to these on-chain metrics as another piece of information that allows us to figure out how people might be trading. Another thing that we're paying attention to, in addition to these on-chain metrics, which come out from which are a part of our market intel platform, is a research project called the Geography of Cryptocurrency, which we're actually doing right now. And we're looking at what is driving adoption all around the world. And we're seeing that there is more economic activity happening than ever before. A lot of that is driven by DeFi, and a lot of that is coming out in pockets all around the world. So it's not just these metrics, it's also having a regional understanding of what is driving crypto adoption in different parts of the world.
Is there activity in one region that is greater than others? Is there one region that stands out to you?
Well, every region is different, and every region doesn't even make sense to really always think about things at the region level. Every country is different. And so every country is impacted by different socioeconomic, geopolitical circumstances, which impact not only the regulatory environment, but the banking environment, which allows for cryptocurrency to be used easily or not easily. And so with this geography report, we look at every single country. We have data at the country level to see what is driving adoption, and each region has a different story. We see remittances playing a part of growth. We've seen, you see international commerce on the rails of cryptocurrency. We're coming out with a lot of really interesting regional research on DeFi, which is going to answer some of those questions.
No regions stick out in particular, or do you have any countries that that stick out?
What sticks out? I think that I wouldn't want to scoop myself. And
fair enough.
But we'll be coming out with that in the next few weeks.
Fair enough. All right. Also in the news is Poly Network and this hack going on. $610 million in crypto stolen on Tuesday. Now half has been given back. I'm sure you have some interesting insights into that. And particularly, I would get, since this is all about Bitcoin, we would like to know, describe to our viewers why this would happen in DeFi, but it wouldn't happen in Bitcoin.
Well, first, I think the right comparison isn't between DeFi and Bitcoin. It's probably between DeFi and exchanges or other services that might be a target of an attacker. And one of the reasons why DeFi is why we're seeing these attacks, and actually we started to see this last year, and we published this in our crime report. We saw a growing number of DeFi platforms were being hacked even last year, and it's continued to kind of keep that trajectory in terms of the number of platforms being hacked. This is a new technology. People are exploiting vulnerabilities. A lot of the code is open source. That's what we saw with Poly Network. And so they are kind of testing the bounds of how effective and good this technology is. And so those holes in the technology and in the code are being exploited by attackers. And we're seeing that happening with the prevalence of DeFi attacks. And the good news is that because cryptocurrency, DeFi, Bitcoin exchanges are transparent, we have recourse. You've probably seen with the response to this Poly Network attack that the whole crypto community has come together. We put out a blog tracking all of the funds, and because of the transparency of blockchains, we're able to see where the funds are going and where they're sitting, and it would be really tough to move them in an effective way without us knowing what's going on.
Which is interesting, because I'm wondering, is this a white hat hacker or just someone who panicked when they realized that, wow, all the crypto I stole is being tracked and I better give it back?
We don't know the motivation for sure. I would say take what the hacker is saying with a grain of salt. And I do know that it would have been a daunting task to effectively launder all of that money with companies such as ours directed and pointed at you and trying and looking to follow the money. And it would have been a really daunting task to effectively launder that. So I don't know their motivations, but if they did get spooked, then it would have made sense that they returned the funds.
We'll see. All right, Kimberly. Well, we're looking forward to your report, your geographical reports. You'll have to come back on when that comes out. Appreciate your time. That was Chainalysis Director of Research, Kimberly Grauer. Coming up, investment in crypto in the first half of 2021 outpaced the total for the previous 3 years. We'll discuss with wealth manager Gerber Kawasaki.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Investment in blockchain and crypto in the first half of 2021 exceeded the total for each of the previous 3 years, according to a KPMG report. The Big Four accounting firm finding that investment activity in blockchain and crypto climbed to $8.7 billion through June of this year. Furthermore, the total was reached from a smaller number of deals, pointing to a greater average value for individual transactions. That's a sign of the evolving nature of investors, with more institutional money flowing as awareness and knowledge of the space proliferates. KPMG's report singles out the mammoth funding rounds into BlockFi, Paxos, and Blockchain.com, all raising $300 million or more as examples. One of fintech's big winners so far in 2021 has been crypto-focused regulation technology, with greater focus on crypto trading buoyed by soaring values of currencies. There is increased demand for safe and secure access to investments, according to the report. Joining us now to discuss is Brett Sifling, investment advisor at Gerber Kawasaki. Welcome to the show, Brett. So first off, I'd like to get your outlook on Bitcoin in the next 3 months compared to your end of year outlook.
Yeah, we're really excited about Bitcoin and cryptocurrencies in general. From Bitcoin getting back up to that 44,000 level, Ethereum's around 3,000. The entire industry is pushing that $2 trillion market cap number. And despite the bad news, whether it's in the infrastructure bill and people having issues with that, or one of the biggest DeFi hacks in the history of crypto, people remain bullish. And especially you're seeing institutions continue to buy up Bitcoin over time. And so we're excited to see how it's going to react once or if it gets to its all-time highs, and if it's able to push through that, and if the interest is great enough.
Speaking of which, PNC Bank also wants to offer their clients crypto investments now. Are you worried about the competition at all?
Not really. These big banks are so late to the game. We've had a partnership with Gemini for quite a while now, where we've been able to actually custodian crypto assets, Bitcoin and Ethereum specifically, and ultimately in a way that's in accordance with the rest of their financial plan. The rest of the industry is slowly catching on to this. Our clients have been happy and investing in it for quite a long time now, and we're able to build it as just a part of their financial plans to get to all of their different goals, whether that's retirement, buying a home, or just trying to really make their money work harder for them.
Mm-hmm. We're also seeing a lot of company giants, fintech giants, getting into crypto in one way or another. Venmo is allowing credit card holders to automatically buy crypto with their cash back. AMC also wants to allow customers to accept or rather will accept Bitcoin payments for film tickets, concessions, and such this year. So how do you interpret this slew of news events?
We do continue to think it's bullish. We're investors in the fintech industry and the public equity markets as well. Companies like PayPal or Square have really been leading the digital revolution. We don't invest in old school names or old banks, for example. We believe that the next generation is going to be using these platforms to transact on a daily basis, really. And the old banking way is long gone. So it's exciting to see more companies like AMC, for example, being able to accept Bitcoin, whether or not that was just them pushing more into the meme community or an actual business decision will be yet to see. But there's also companies along the lines of Square, who's just really setting precedents for how crypto should be operated.
Mm-hmm. Interesting. All right, Brett, that's all we got time for, but thanks for joining us and giving us your analysis of the latest news. That was Gerber Kawasaki investment advisor, Brett Sifling. That's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Move, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.